I'd like to bring in Carl.
Welcome to the show.
Yes.
Hey.
So here's what we've got for you. And yes, my dad has been actively engaged. You've been doing market analysis since the early 80s. I know that. And it's been impressive. I've learned just about everything I know from my father. He's taught me well. I've just learned the stock charts and started working on CMT. So I've gotten, a little smattering of everything. But welcome back to the show. It wasn't even my birthday, and I was able to get you to come back.
Well, you're welcome. Should I take the screen now?
Yes, go right to it. And what are you going to be talking to us about today?
I've got actually a three-part presentation. I want to talk about parabolics first, and then moving along to earnings and showing how to get a technical look at earnings, and then finally showing one of the stock charts tools that I think is really cool that relates to dividends. So let me begin with the parabolic presentation. The subtitle of this would be Parabolics That I Have Known and Loved. The parabolic it begins flat and it just swoops up until pretty much the price is going vertical. And I don't hear people talking about this very much, but you see them on a regular basis. And here we have gold, a monthly chart, and obviously, now I've reported on this every week pretty near, but it's one of the things that happened here. Once it broke the parabolic, you worry about it really crashing. As it turned out, it moved sideways for a while, and which case I thought it might have been going into a high-level consolidation, but then it finally did break down. And we ended up with a 50% or close to 50% decline from the highs. You'll find in the parabolics that there are usually smaller ones embedded within the swoop, and they're small compared to the big one, but at the time, in that time frame, they were quite impressive, I'm sure. Here is one that it corrected somewhat, but it basically moved sideways. And then from out of that, another vertical move, and another parabolic curve there. And that's when it corrected a pretty good amount, down about 35%. But this is something that I look for on a regular basis, and it's one of those things that I don't hear many people talking about, but they happen all the time. Here's a really a latest one, Bitcoin, and that's kind of like the tulip mania of modern times. But again, you see some minor swoops going up, but the major one is it just goes vertical. When you see that, especially with something that has no more substance than a bag of feathers, you just need to, watch out. And here we've corrected 65%. I don't see any reason why it's not going to go lower. But again, this is a pattern that just when you start seeing prices go vertical, just figure what is your exit.
Hey, Carl.
Yeah.
Have you found yourself in one of these parabolics before? I'm just curious, if you've been in one before, if you've been invested in something like this, how do you, what would be your suggestion to somebody who finds themselves in something like this as to a signal maybe to get out before you see all the down move like we've seen with Bitcoin?
I just don't know the answer to that. But when you're in it, you've got to you've got to figure you can cut off your greed and get out at a reasonable gain. It's funny you bring this up. I'll go back to the gold chart. I happen to have a substantial position at time, somewhere around here when it was going up. And at one point, I had a 20% gain, and I managed to escape with a 5% gain. So.
Hey, that 5% looks pretty good though now after what happened.
But it just shows you how fast they can move, and you got to know you've got to be prepared to get out of the way, no matter what the story is at the time, how great it's going to be, because it's always got a story. And I should say that mostly you don't see these parabolics with as much with indexes, but they're more frequently seen with stocks, usually a stock with a story and no substance, and they go up, and they usually crash all the way down to the base because there was nothing there to begin with. You still see them obviously in market indexes. They're just they're not quite as volatile most of the time, but when you start seeing vertical, you want to get out. Here we have the 1920s and 30s, and the swoop up to the October 1929 high. I shouldn't say. I think that was actually August high, and but here before that, you had another vertical advance and high-level consolidation. Would have been a good time to get out in hindsight, but I'm just saying when you see and they start moving to the side, if anybody that got out here was feeling pretty good about it down here. But again, this was one. The market lost 89% of its value.
Yeah, and that one was a long time ago, but I think one that certainly was more recent would have been the dot-com bubble back in the late 90s into early 2000s. I'm sure a lot of folks listening remember that, where we had a lot of companies had no revenues or very few revenues, and yet the stock prices were going straight up, and then finally the party ended, and many of those companies ended up going bankrupt.
Yeah, that was the technology sector, the NASDAQ 100, was it?
Yeah, I know the NASDAQ went from, I want to say 2,700 in October of 1999 to about 5,200 in March. So, I mean, that last push up in 6 months was almost a doubling of the NASDAQ index.
And when it finally broke, it went down like 80%, if I recall.
Mm-hmm.
Is that right?
Yeah.
Yep.
So here we have the famous 87 crash. Again, something of a parabolic embedded here preceding the major crash and a high-level consolidation. Another vertical advance and consolidation, finally going to the all-time high, and then ultimately crash. One of the things that doesn't show us well on this chart, but on the daily chart, it's really, really cool. But we have virtually identical formations here. You've got the high, and then pullback, and then an attempt, and another one, and then another pullback, and then it finally breaks and goes higher. And then you have the same one, pullback, an advance, and another pullback, and it finally breaks out, and you think it's going somewhere, but it doesn't, of course. I'll have to show that chart sometime. It's just when people start saying, "Oh, this looks just like this time." Well, maybe it does. Maybe it does, but it's not necessarily going to be the same outcome. Getting to modern times, we have the latest parabolic, and it's embedded in quite a large formation. So, but it's still a parabolic. It's not as long term, and it doesn't have that kind of projection coming out of it. But still, once the parabolic broke, we've had some horrible market action since that time, and we're still good. Cyclical bull market is still in effect, and I still think, based on this breakdown and the kind of market action we've had, I believe we've moved into a bear market. Still more to see before that's for certain, but that's my current evaluation of the situation. I want to look at this at a longer term. Now, here we see the secular bull market beginning in 2009, and then we have the cyclical bull that's going off at a much higher angle of ascent. So this is not a parabolic, but you have the same kind of mechanics. It's getting steeper and steeper. And notice here, the market prices got pretty far away from this rising trend line. And now here we've got, it's much, much farther away from the secular rising trend line. So I'm looking for some kind of correction back to this area. I mean, that's a logical expectation, I think. Let's see here. Okay, what we got? Here's our earnings segment. Now, I saw this kind of a chart many years ago, so this is not an original idea, but I don't see it anywhere anymore. We still carry it on StockCharts. We have, instead of showing the actual earnings, you show where the S&P would be if it had a PE of 20, which is overvalued, and that's the red line. And then if it was fair value, is the blue line, and then undervalued is the green line. And you watch price move within that range, and right now, well, here back in this is the 2000 top, it was way above this range, and here we are again in that same kind of situation. You can't do any timing on it. It's just, this is a warning. It's just that this is quite warped, and something could happen at any time. Looking at well, you'll notice that actually, in terms of where the price has been moving, it hasn't been any lower than fair value, the blue line, for 30 years. So why are we concerned about it? Well, looking at the longer term, this takes a while, this chart to generate, because there's so much history on it. But you can see that this is about 90 years. For much of that time, price moved up and down within that range, and it occasionally got way undervalued. And of course, here's World War II. This is right after Pearl Harbor when it got. I'm sorry, here we go. And then post-war, but it stayed undervalued for a very long time, and it gets up to the top of that range and then moves down. This is another long period of undervalue. And then 1984 was the last time we touched that line. It's been Buster's gang ever since. As far as where we're likely to go, if there's, not likely, let's just say that it's not outside the range of possibility for prices to get back down to the green line. Now, when that happens, we don't know exactly where the green line would be. It might be up here, might be down here. But historically speaking, yeah, it could be moved back down to undervalued, and it would be a good time to pick up some stock, I would say. But you know, the 2009 low, look here, it still wasn't even down to fair value. And so again, when are we ever going to see undervalued again is beyond me. Just as a on the side here, you know, this spike down in that range, we had in the fourth quarter of 2008, since everybody was in the toilet, companies just threw everything they could into the loss column. And you know, so they just sort of flushed it out and got it off the books. It was a great time because nobody was going to notice it because things were so horrible. Okay, this is a new segment here. We're going to talk about undervalued stocks. And I was clicking through the Dow 30, and I just noticed that Verizon had a PE of 6.5. And I thought, man, that is really, really undervalued. And a yield right now is 4.90, 4.9%, I should say. And I was saying, well, that's, you know, that's pretty good. I wonder if there's, you know, how is AT&T doing? And I looked at that, and here it is. It's got a 5.5% yield, and it's way undervalued again at 7.42. And this brings me to the new feature that StockCharts has. Oh, I'm sorry. Right here, I did want to see, well, how's the telecom sector doing in general? Well, yield is not anywhere like what those two stocks have. So it's telecom is not necessarily the reason those stocks are where they are. Here's the cool feature. If you want to look at the dividend history, just go to, it's an overlay, and you select events. And that's what you get. Quarterly dividends. And you can see the history and it's steadily rising dividends on that stock. Got the same thing on AT&T. Another thing I picked up, totally off the subject, but you notice, you know, the market hit its bear market low in 2009. These two stocks hit their bear market low in 2008. So there's a positive divergence of price against the broad market. That's a good sign. So that's wraps up my presentation.
Well, we do have just a few questions here.
Okay.
One of the first ones, and I told everybody I'd put that PE chart in the blog today because everybody wants to know, you know, what the settings are. How do you get that chart? And do we still manually input those numbers into that, or does StockCharts do that?
Yes, I do. No, I do that.
Okay.
I do maintain that manner. I'm going to try to get Chip's gang to pick it up, but right now I'm doing it.
Well, we'll bug them some more. So anyway, I will put that chart in there so that you can, everybody can go in there, and then you'll have it. You can put it in your chart lists, and so if you're interested in that, that would be great.
You know, this is the great thing about charts is they give data context. They say, well, the PE is such and such. Well, what does that mean on a historical basis? And that chart just says it all. I mean, it's right there. You know that it's at a, it's really, really overvalued right now. Again, it doesn't mean there's going to be a correction immediately. You can't use timing, but you can say, all right, if I'm making decisions right now, I think, we're in a bear market. Not many people agree with me, but I notice there are more people coming around to that point of view. But you take the fact that maybe we're in a bear market now, and then the market's super overvalued, and you say, well, maybe I don't want to be picking up longs right now. That doesn't mean you want to go short, but right now is the time to, keep your head down. We got, I don't have the daily chart of the S&P 500, but right now it's the 20 EMAs below the 50, which has us in a neutral stance, which is perfectly correct as far as I'm concerned right now. And that's one of the things, getting back to parabolics. Parabolics break all your tools. The so violent upswing that for the trend model that we follow, it just gets those EMAs stretched so far apart, it takes forever for them to finally, start doing what they're supposed to do. And the market comes down way too fast for that to catch up, in the beginning. So when that happens, you just have to be ready to, switch to some other tool or method of getting out of the way. And, as I said, I saw when it broke the parabolic and we had such violent market activity, even John Bogle of Vanguard said he's never seen anything like it, and he's a lot older than me.
All right, let's see. Somebody mentioned, since you're talking about parabolics, if you wouldn't mind looking at a particular chart for us. And it was, let me find it now. I had to refresh my chat box here, but I believe it was one of the weed ones. It was hmmj.to.
Okay,
So,
I'm trying to figure out how to get a chart.
oh, just go to the enter symbol up at the top there, the sharp chart a little bit. No, there too. hmmj.to. They're saying that they're seeing a parabolic there. And what are your thoughts?
Absolutely. No question. What is this? Medical marijuana. It looks a lot like Bitcoin, doesn't it?
Yes, very much.
Yeah, but yeah, obviously that's one that has, a lot of people have a lot of love for, and they get excited about how rich everybody's going to get now that it's legal. But yeah, there's a parabolic, and the chances are very high that it's going to go back down to this level. I mean, when you see it doing this much damage, going back to the basing pattern. This doesn't have a very much history, but boy, it's certainly a great example.
Yes. Let's see. What else do we have here? Someone noticed that you use log charts sometimes, but not all the time. Do you have a preference?
I don't. Yeah, my preference is I don't like log charts. The only time I use log charts is when I just have so much history, it would be meaningless for the chart not to be a log chart. Let's looking at this long-term. Now, if I change this to a, where's that? I change it to linear. All that history from 26 till about the early 80s is useless. You can't see anything. Um, but if you take the gold, I meant to do this too. If you take the gold chart, this is a linear chart. If you, where's log scale? Make it log scale. It takes all the excitement out of the chart. Up and it just, now someone would say, well, that's the beauty of it. But I can never figure out what I'm looking at with a log chart. That's all. And so I don't like to use them, but that doesn't say anything bad about people who do like them. But I don't like them. I don't know what I'm looking at most of the time.
Right. And let's see. Somebody was asking, has Carl replaced PE with forward PE in your chart? And I know we had this question before when we were at Decision Point. I don't know if I'm asking it. But.
No, I don't use forward PE. I use 12-month trailing, which is the standard, generally accepted accounting procedure. Mm-hmm. And I wouldn't know how to make a chart like that because there's really not the kind of data around. Mm-hmm. So the one thing that would be good on the PE chart, if I could move these three bands back 1 quarter, because basically we're looking at the most recent reading on here is from fourth quarter 2017, and we won't have the first quarter of this year until 30 days, 3 months from now, roughly 3 months.
All right. I think that there's a couple of extra questions in there, but I know we're kind of running low on time. What's your thoughts on gold right now? And I know you write every Friday in the Decision Point blog, the weekly wrap. And so if you are curious how Carl feels about the market in general, and, I always do the big four for everybody, highly recommend you go read that because you've been talking about a possible bear market and now the thought that we are in one in the weekly wrap for quite some time.
Right. I was no precise timing on that. It was just I didn't pick a top by any means. It's just a matter of once I saw that parabolic break and then move the prices just chopping around in these wild swings. I just thought, no, it's over. It's over. But as for gold, my outlook on gold is sort of positive because the PMO is not exciting, but it is rising and it is above its signal line. We've got the 6 EMA above the 10 TMA, which is what I use on the monthly chart. So the price is rising enough to keep those EMAs positive. But the main thing I'm looking for is for this top to be exceeded. I want to see a nice movement. Then we would have a bottom above a bottom and a top above the top, which sets up your rising trend on a long-term basis.
All right.
You don't have an upside projection. Just have no idea.
Well, as we all know, typically if the market's going to go into kind of a nosedive or continue to trickle lower, typically we see gold do better. It's been sort of chopping around like the market though lately.
It's not a correlation really. I can remember one time the Gulf War when it started, stocks crashed and gold went crazy. But so you would say, a flight to safety into gold, but that was really, I just don't see the correlation. It doesn't. On the TV the other day, it was like gold was up, so that people were moving out of stocks and then the gold. That's just nonsense.
Yeah. All right. Well, it's been absolutely a pleasure to have you here. Now everybody can see what my dad and I talk about all the time. Not really.
I have one more question for you, if you don't mind.
Sure.
Yeah, I know that you were talking about, being in a bear market, and everybody's got their own opinion. And, definitely we're consolidating, trying to figure out which way it wants to go. What would need to happen for you to feel like, well, that bear market call was really maybe, you were looking for something to confirm it, you never got it, and now you're back in the bullish camp? What would need to happen for you to become more bullish about the market?
Well, to become more bullish, let me see if I can. This chart is not scaled for this presentation, but I think it'll do. Right now, the 20 is below the 50. That needs to be reversed. And beyond that, new highs be made. I don't think that's going to happen. What I think might happen is that if you look at that, I think we're going to see that declining tops line exceeded. That's possible. And but I don't think we're going to see new highs. That's just the way I see it right now. But
so you would remain cautious unless we broke out to new highs.
I'm sorry, say again?
You would remain cautious unless we broke out to new highs. That's what you would look for to confirm the continuation of a bull market, would be the SPY breaking out to a new high?
Yeah, that would, certainly, make a big difference. But, getting the 20 back above the 50 EMA, that would put us on a buy signal again. It's just that for one thing, I feel it's very risky at this point in time. I considering how overvalued the market is and the way the price action has been, it's just risky. For me, trying to, at my age, I don't have a time to make it back. But it's.
Well, I know a lot. It's funny because we did get a comment. Oh gosh, Tom, you remember it a while back, saying something like, we were young whippersnappers, that we needed to talk to Carl, somebody who had lived through some of the bear markets, so that we would see reason that this is actually could be a bear market, because they just thought we didn't have the experience, Tom, right?
Well, I tell you, I've experienced it because I've got a portfolio to show going back through a couple bear markets. So, I've got the experience there. But I guess for me, because I'm still residing in the bullish camp, and the big reason, and I'll talk about this a little bit more when we get into sector rotation later in the show, when you look back at the last couple of bear markets, money tends to rotate into very defensive areas at the last high. You start seeing deterioration in a lot of the relative strength in key areas like technology and financials and consumer discretionary. And my biggest problem is that we really haven't seen that deterioration. And so underneath the surface of what's going on, yes, there's a lot of volatility. Yes, there's a lot of back and forth action. It's scary, but I'm still seeing pillars of strength underneath the market, even though those swings have been very, significant. So that's kind of what I'm banking on, is I just haven't seen the market. And to me, it makes sense. If we're going into a bear market, there would be a lot of money being repositioned into more defensive areas. And that's just doesn't seem to be happening yet.
Well, the thing is that if you look back the last 20, 30 years, that there's not been any parabolic tops either. This is the first one of those to come along for the S&P for a long time. That's why I think it's different this time, But I know what you're talking about. Normally the market rolls over. The tops are kind of gentle and et cetera. But this is just that parabolic break to me was a really major sign, But again, it's a matter of how much do you really need to be in the market? How much exposure do you really want and need? I mean, it's really a personal it's a personal decision, and you have to take what you know and go with that. Make your best decision.
Yeah, I think it gets back to managing risk, and of course that's what everyone's going to be talking about at ChartCon, because it is a personal decision. I mean, I can sit here and say it's going to, I'm bullish, and you can say you're bearish, but really it's everyone else out there has got to figure out what they want to do with their money and live with the consequences. So it is a difficult decision to make, and those who are cautious probably should hedge or have some kind of protection, one way or the other.
Back when I was starting out, one of the kind of the template for doing this kind of work was to come up with an outcome that you thought was going to happen, and you would stick to that. You would pound your fist, and that was it. This is, it's kind of like the Joe Granville model, and that's the kind of thing that I saw for many years, and tried to emulate, and found out that I didn't sleep well because a lot of times I didn't have the courage of my convictions, but I just think it's so much better that we can have a discussion about this, and
right, we can all have different opinions, and
right.
Yeah. It's a little bit more, you've been in the market timing arena. And so a lot of, let's face it, timer digest and such. I mean, we have to say, hey, it's going to go up next week. Hey, it's going to, I think the Dow's going to end at this. So, I mean, we do as market timers, I think sometimes have to, take draw a line in the sand. But ultimately with the analysis, we can temper that as well.
Yeah. All right, years ago, I switched to using the trend model, and because that was my official position. I mean, I could have an opinion different from what the model said, but that was the official position, and I didn't have to lose sleep about whether I should change it the next day.
Mm-hmm.
Definitely is an advantage of a mechanical system, is that you just follow your signals. Boom, it's done.
And it's not the greatest system ever, but it just gives you. It gives you the 20 is below the 50. Well, that's a weak market. That's it. Per period. It takes a lot of, and then get the 50 below the 200. Well, that's a bear market, and that, it takes a lot of work to get that kind of a relationship. And so it tells you, it gives you a context again, or this is a broad brush of where the technicals say the market is, but it's not perfect.
I do want to say that, just like last time, it's a pleasure having you on the show. We're constantly getting that decision point flavor from Aaron, who continues to carry that torch for you here on the show. And it's a different perspective, but it's one that makes sense, because like you said, when the moving averages, you can't have a bear market without those moving averages flipping. So once you see that flip, you definitely need to take necessary precautions. And we're seeing some of that in the current market for sure.
Yes. Well, thanks so much for coming on, and hopefully, I managed to get you on, and it wasn't my birthday. Hopefully we can get you back in the next month or two. That would be great.
Yeah, that'll be great.
Hey, Carl.
Yeah.
My birthday's next month. We will have you in for my birthday.
Okay.
There you go. Well,
have a good one. It was good talking to you, Carl.
Thank you.
Hi, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. This instructional video will cover line annotations in chart notes. Here's what we're going to cover today. We'll start with drawing trend lines, then we'll move on to modifying the color and the opacity of those trend lines. We'll then show you how to change the width, the style, and the arrowheads on these trend lines, and how the pin feature works. We'll then move on to the vertical and horizontal lines, show you how to use the auto support and resistance tool, and then show you how to draw parabolas or curved lines. Selecting the trend line tool and drawing trend lines. I'm going to open up Chart Notes by clicking the Annotate link at the lower left, and then I'm going to open up the line annotations by clicking this little triangle at the top of the trend line button, and you can see all the line annotations there. If I want to draw a trend line, I select that trend line, I move to the starting point, click, and then drag that trend line to where I want it to be. And I choose my ending point, and I let go, and I have a trend line. You will immediately see that there are two yellow handles at either end of the trend line, and these can be used for further adjustments. If I want to extend that trend line a little further, I can do that. If I want to shorten it on one end and raise it, I can do that as well. Sometimes you'll see your trend line and you won't see the yellow handles for making adjustments. Well, you can activate that trend line by going over to the selection tool at the top left, little arrow there. Click that and you can select the trend line. And once you select it, the yellow handles appear and you can make your adjustments to that trend line. Chartists can also draw a perfectly straight horizontal or vertical line. Select the trend line, hold the control button down, and drag and draw. And you can see it will be perfectly straight. If you have an existing trend line you want to make straight, grab a handle, hold the control button down, and drag it to make it straight. The same can be done with vertical lines. Choosing colors and adjusting the opacity of your lines. You can easily modify the colors by using the drop-down menu at the top. If you see, there are three colors on the left bar here, and those are the three most recently used colors. So if I want to change this upper trend line to red, I can immediately use one of those three most recently used colors. If I want a different color, I click the drop down and you can see I have a whole list of possible colors. So I can choose blue again, and there are some other recently used colors at the bottom as well. You can adjust the opacity of a trend line by opening up the color drop-down menu and using the slider at the bottom. And as I slide this slider to the left, the trend line becomes more transparent. You can also create a custom color by using the color selector on the right. I can use the slider to choose a color I like, then pick within that color box and click Choose to change that color. Adjusting the width, style, arrowhead, and using the pen feature. I can use the toolbar at the top to change the width, the styles, or the heads. You can see I've got the red trend line selected. And if I want a thicker trend line, I can click a thicker line there at the top. It's currently a solid line. You can see the blue solid line is highlighted. That's the current line style. I can choose a dashed line if I want. And if I want to add an arrowhead to the end of that, I can click for the arrowhead. You can also add or remove an arrowhead by highlighting that line, selecting it, and holding down the Shift key and then clicking. So I click and the arrowhead disappears, hold down the Shift key, click again, and the arrowhead reappears. There's a button at the end of the toolbar at the top for pinning your annotations, including trend lines. Now by default, the annotations are not pinned. And what that means is, if you have this trend line here, it's going to stay with this particular price set as new data comes on and it moves to the left. Same with this trend line here. But the black trend lines here, I'm going to go ahead and pin them. And that means they're going to stay in the middle of the chart. Now I'm going to adjust the date range so you can see how pinned annotations work and normal annotations. I move the date range to the left, and you can see that the blue trend line at the top stays with the prices, as does the red trend line, so it moves with the prices. But the pinned annotation does not move, and it stays in the center of the chart. Drawing vertical and horizontal lines. I can place a vertical or horizontal line by moving to the vertical line button, clicking it, and then moving to the spot on the chart I want a vertical line and just doing a click. And I move to another spot, add a click. And you can see the yellow handles at the top and the bottom show that it is selected. So if I want to move that to another spot, I can click and drag to another spot. When you click and hold down on that vertical line, the date will appear and you can move that vertical line to a particular date. The horizontal line works the same way. I simply click the horizontal line, click to add horizontal lines, and if you see over on the left, when I click on that line and hold the click, you can see the value and you can move it to where you want it. Using auto support and resistance lines. The auto support and resistance line works similar to the horizontal line. Click to select, move to the spot you want to add that line, and click. And you can see it will be red when prices are below, and it turns green when prices are above. So you can click to add more, and you can also hold down that click to see the value of the line and move it to where you want it to be. Drawing parabolas or curved lines. There are two ways to draw the parabola. First, we select it, and then we can click on 3 spots on the chart to draw the beginning, the middle, and the end. And you can see the handles are there, and we can use those handles to adjust the parabola as we like. Or we can draw a freehand parabola, and it will take shape. We can do that above or below prices. If you want to move the parabola, you can use the select button to select a parabola and then move the entire thing. And that concludes this video on line annotations for chart notes. Thanks for watching, and be sure to check out our other instructional videos. Hi, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. This instructional video will cover line studies in chart notes. Here are the topics and the timeline for today. We'll show you where to learn more about these line studies in our chart school. We'll show you how to draw Fibonacci retracements and quadrant lines. Then we'll turn to Fibonacci arcs and time zones. We'll show you how easy it is to draw cycle lines, circles, and the sine wave. Then we'll show you the Roth regression channel and Andrews pitchfork. And finally, we'll draw the Fibonacci fan and speed lines. Learning more about line studies in chart school. First, I will show you where you can find more information about these line studies. There's a drop-down menu at the top of every web page, and there you can access the chart school. If you don't see that, it means your browser is not quite opened wide enough. And there you can see the main links for stock charts. So if I click on the chart school, I will then go to the chart analysis section. From here, I can scroll to the bottom, or I can go to the outline and click Chart Annotations Tools, and there are the Chart School articles. Drawing Fibonacci retracements and quadrant lines. Chartists can access the line studies from the left-hand toolbar. In the middle, you will see 3 arcs and a little triangle at the top of that button. And if you click on that button, you'll get a little pop-out, and all of the available line studies will be shown. The first line study is the Fibonacci retracement. I can click that to select it, move to the point where I want to start my retracements, click, hold that click down, and drag to draw your retracements. Once you draw your retracements, you will see yellow handles, and you can use those yellow handles to adjust the retracements as you see fit. You can also click in the middle of the line to move the entire retracement. And you can also hide or show the price levels. You can see I've got price levels here. And if I hold down the Control key and click on that line, they disappear. And if I click again, they reappear. We can also add additional Fibonacci lines by holding down the Control key and clicking the yellow handle and dragging. And you can see that additional Fibonacci levels appear on the Fibonacci retracement. If you would like to see additional Fibonacci levels every time you use the Fibonacci retracements tool, simply select Fibonacci retracement, move to the point you want to draw, hold down the Control key, click, and drag, and you can see those extra Fibonacci levels will automatically appear. And of course, you can add and remove those extra levels by holding down the Control key and dragging the yellow handles. You can easily adjust the line width or the colors for these line studies by first selecting the line study. I'll click the Select button at the top left, and then I will click on the Fibonacci retracements to activate it. And then I can choose any of these colors. There's the 3 most recently used colors, or I can use the drop down to get a broader array of colors. And once I select the color, I can also adjust the line width. The quadrant lines annotation works similar to the Fibonacci retracements. Click on the annotation to select, move to your starting point, click, hold that click down, and drag to draw your quadrant lines. You will see the yellow handles, and you can adjust those to adjust the quadrant lines, or you can move the entire quadrant by clicking that middle line, and you can see the quadrant will expand and contract based on the high-low range in that particular area. The Fibonacci arc and Fibonacci time zone. Chartists can add a Fibonacci arc by going to the line studies and selecting Fibonacci arc. You can start from a high, click, hold that down, and drag to a point you want to stop at, a high to a low, and your arcs will appear. You can use the yellow handles to move that Fibonacci arc, and you can also draw from a low to a high. The Fibonacci time zone works with just one click, well, 2. You select it and then click where you want to draw it. And you can see it starts off with the Fibonacci sequence and extends. And you can move that along the date axis, but you cannot change the spacing on the Fibonacci time zone. Next, we will move to cycle lines, cycle circles, and sine waves. The cycle line study makes it really easy to measure and analyze cycles. We'll select the cycle line annotation, click and drag to start our cycle lines. And you can see there's a number here with a yellow handle. I can click and drag that yellow handle to make the cycle longer or shorter. And then I could also click on any of the other lines to move the entire cycle as I see fit. The cycle circles are similar. I will click to activate it, click and drag to make my cycle circles. And then I can click on the line to move it where I want on the chart. And I can click on this yellow handle to make the cycle longer or shorter. The sine wave works a little bit different. I will select it and then I will click and drag, but you also have to drag up and down as well as right and left to adjust your sine wave. And then you can click in the middle of the sine wave to move the entire annotation. Drawing the Rough regression channel and the Andrews pitchfork. The Rough regression channel is drawn similar to a trend line. I'll select the Rough regression channel, go to my starting point, click, hold that down, and drag. And you can see the channel will take shape. We have, of course, yellow handles we can use to adjust that channel. You can click in the middle of the channel, that line there, to move the entire channel, and you can see how it adjusts to the price range it is currently in. Andrews pitchfork works just a little bit differently. When you select that annotation, you move to the chart and you click 3 times on the places you want to draw that pitchfork. 1, 2, 3, and I will get my pitchfork. And then I can use those handles to adjust the pitchfork, and I can click and drag one of the lines to move the entire annotation. Adding the Fibonacci fan and speed lines to your chart. The Fibonacci fan works similar to a trend line. You will move to your starting point, click, hold that click down, and drag to your ending point, and your Fibonacci fan will appear. You can use the yellow handle to adjust your fan line as you see fit, or you can move the entire fan. The speed lines work pretty much the same way. I'll select the speed lines, click to where I want to start, and drag to where I want to finish. And that concludes this instructional video for chart notes. Be sure to check out our other instructional videos, and thanks for watching.
Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under Indicators, select Volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click Update, and that will give you this nice little line on here so you can see if it's above or below average volume. Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under Indicators, select Volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click Update, and that will give you this nice little line on here so you can see if it's above or below average volume.